You're live.
Hey, good evening, everybody. Rich is having a little problem getting in here, so we just need a couple of minutes. We haven't had any problems with this software, and this is the first time that we've used it quite a bit. We haven't had any problems so far. So just give me a couple of minutes and let's try to get this straightened out with Rich. He should be back in any minute. Now, also, if you guys see me looking up, I'm on a laptop, and what I do is I go to Twitter to look at the charts because I can't get the charts as good as I can on Twitter. So if you see me kind of looking up, that's what I'm looking at. And generally, if we're doing it live during the trading session, I'm like, I'm all over the place. But let's see if Rich is going to be able to pull this off. We hope he can. And if not, I'll have to wing it, which I think I'm okay doing. But we need Rich.
I'm backstage. Now you're in the show. Danny, I'm sorry. Can you hear me out there? Just shake your head, yes or no. Let's see if I can do a presentation here.
Hey, Rich, I hear you. Can you hear me?
No, he can't.
He can't.
Does he have his headphone plugged in or something?
Yeah.
Oh boy.
Entire screen.
All right, listen, give us a couple minutes, you guys, and if we can't get it up, we're just going to cancel it. But let me, Marlon, if you'll close the curtain for a minute, let me call Rich.
I don't know why I can't hear you.
Let's see. Hang on.
Mute, unmute. The show. Happens. If they can hear me, then I'll be happy to talk about what I'm seeing. I'm actually seeing some pretty interesting stuff.
I think I got you now. I think the sound's on.
Let's see.
Rich, can you hear me?
Well, it is for you. If you can hear me, I can't hear you. That's the only thing. So I'll run from there for a little bit, Danny. Thanks for coming tonight, guys. Although we're having a few technical issues, or I am. I have been looking at the markets lately, and one of the things I look at a lot is Ichimoku. I've been watching Ichimoku for like 20 years almost. I had actually had an Ichimoku program from somebody that wrote it a long time ago. And this is my longer term Nasdaq Ichimoku, and what I saw in here was we had a bull cross today with this market action, and we're very close to like shooting up for new highs. A few weeks ago, I actually I think I put it in the bonds or the notes. I've got a note on here. Let's see, notes. I know it's in the bonds. And by the way, we're breaking out in the notes and the bonds. Let me go here to the ZB. I guess I put that on my long-term chart. Sorry to be a little distracting here, but keep a lot of charts. And there's my bonds. So let's get my notes right there. And this is it. This is what I said a couple of weeks ago when I was looking at the notes. I actually had this low projection in the notes from back here in February. I was projecting that they would go down to this 107.01 area, and they almost made it. And then I said back here, I dated this back on 4/16. I actually saw it a few days before there. I thought that it would be 6 to 8 weeks before this trend turned back up, because I thought this price was going to move down and around the cloud. I thought the cloud was going to have to move a little lower, but that has not been the case. And as a matter of fact, in 3 days, we're going to get what I call a switch here in the long-term chart. And we're going to get a switch, and it's going to be positive, and it's going to point to the bonds and the notes moving higher. And as I say, I thought this would be 6 to 8 weeks. It's going to turn out that it's going to be about 4 weeks. If this continues on the way it's continuing on for the rest of this week, I think we're going to break out here in the bonds. The notes move higher, and therefore all the stocks are going to move higher. And I'm looking for if I go to my, we're already breaking out here in this bond, but if I go to my ES and NQ charts here on this is what I would call an intermediate kind of term. This is going to be a potentially really strong rally. I mean, as strong as the rally we had back last fall. I don't think it's going to carry on as far, but it's definitely going to be really strong. And we're going to know probably by Friday. And we may know tomorrow. We may know Thursday. I have some levels picked out that will confirm what's going on here. And as I say, it's been kind of a surprise to me, because I thought it would be, as I say, I thought it would be 6 to 8 weeks, but it's happening sooner. And looking here at the ES, this is almost a completely bullish outlook here. Tomorrow, as long as we're trading above the cloud, and as long as we close above the cloud, this intermediate term is going to be completely bullish. It's going to be the same way in the NASDAQ. And I thought for a little bit earlier today that it was really going to take off right away, and then we moved down a little bit, and I thought, well, there could be a down move today for 15 or 20 points, but what I'm looking for to the upside, it really wouldn't have mattered. And as it turned out, and I picked some put spreads that, to buy for a couple of bucks that I thought would had a good chance of playing, but risk $2, but you would make 18 had it worked out. So, or some function thereof. So that didn't work. And I think because it didn't work, the market actually ended up stronger, and kind of confirming what I'm thinking is going to happen this week. I think we're gonna move up over the next couple of days, and if we get to the levels that I'm anticipating, we're gonna have a really strong rally over the next couple of weeks. So it's probably time to get out the buy list, and think about the upside. I'll just go over here. I'll look at the ES. It's the same way, both the ES and the NQ. And I can't show you everything that I look at, but I do show it in my room to people. And I love Ichimoku. The cloud is really, really powerful. And I look at several elements that I've kind of discovered over the years that really enhance getting an idea about market direction. It's not precise, nothing's precise, but it certainly can give you a really good idea about what's happening. And what I see happening here is every bit as powerful as what happened at the end of October, the beginning of November last year. So I wish I could take questions. But I don't even think I can see the chat. And if Danny is there to take over again, I appreciate everybody listening to me ramble on about the markets. But I'm looking for some tomorrow and Thursday and Friday. If we're up to some of these higher levels up here. We are absolutely going higher, and we're going a lot higher, and it's going to be real quick. So that's all I've got. I hope you guys appreciated it. And Danny, if you want to take back over, feel free to do so. And I'll see if I'm not seeing anything there yet, but so I hope that he's done that.
Yeah, I'm right here.
Thank you, Danny.
You got it, Rich.
It was fun.
This isn't exactly the way we planned it, okay? And all I really want to say, and it's not technical in any nature, or maybe it is, we've fallen into this kind of like narrow chop. I mean, we did under 1 million contracts yesterday, which is a rarity. And then today we just did a little bit over 1 million contracts in the S&P. And I read something about FactSet. Let me look. I wrote about it in the opening print. And hold on. Yeah, let me see. I can pull it out. Kind of interesting because if you're looking for a clue for why it's so slow, and it really is slow. I mean, today we had like a 20 handle range. That's not an ordinary day for the S&P. Excuse me. And then when you throw in the low volume, I'm trying to figure out what it means. Does it mean that less people are trading? Or does it mean that people are holding whatever positions they have and they're not adding? I'm not quite sure. But anyways, according to FactSet, and I'm just reading what I put in the opening print, it says the majority of companies have so far beaten forecasts for earnings, but they're not getting the big boost that they usually get from their stock prices afterwards, as they usually do. And companies that fall short of profit expectations have seen their stocks sink by more the following day than they have historically. Now, I'm not really quite sure, you can take that the way you want. I mean, but at the end of the day, I'm always searching for why the markets do what they do. I mean, and we're stuck in a little bit of a tight range and very, very low volumes. But tomorrow, we have wholesale inventories, I think at 10 o'clock, and then we have 3 Fed speakers. And I think that could kind of warm up the tape a little bit. I don't know if that's part of the reason that the markets are kind of hesitating a little bit here, but I agree with Rich. Look, I don't think that everybody has covered their shorts yet here. I don't. We go up 180 handles or 170 points and 3 sessions, and I just don't get the feeling that everybody's out. I don't. And then we're going into expiration at the end of the week. And again, I think that if Rich is right, and I agree with him, that we start moving up a little bit, it's going to be all stops on the upside. And it's not very often that when you, and I was just looking at the ES chart. I wish I knew how to put it up. But I've got it on the big screen, so I don't think I can do it. But when I looked at the whole day's price, it was mainly hanging a little bit around, or a little above, or a little below the VWAP all day long. That's not very characteristic of the S&P. And yeah, we did have a little sell-off late in the day and a little rally and then another pullback. But at the end of the day, I don't think the markets act that bad. I think that we may be caught up in a little bit of a back and fill pattern. And if we're not, I think that the 5190 level's going to be big. And on the upside, I think we get above today's high. I think it's just going to be all stops on the upside. Now, the other thing that I think played into today was kind of NVIDIA was up early, and then NVIDIA kind of got weak. And I think that just kind of threw the NASDAQ into the tech sector into kind of a little of a bid early in the morning, and then kind of a like slow drip down with no volume. So anyways, like I said, sorry about this. We didn't plan on the technical difficulties, and I assure you that we'll straighten it out. So is there anybody that has any questions? And the other thing, Rich wanted to take some questions if he had known how to use the text on the side. But is there anybody out there that wants to ask any questions? I'm one of the things I did. Excuse me. One of the things I did do today, I went on Twitter and I did a live stream, and a lot of people came on. And you know what the main thrust of that is that I think that we're going to head into a lot of volatility as we go into the end of the summer. And really, I think the main thing is going to be as we go into October, when the Democratic convention is in Chicago. Now, as I said today on the live stream, a lot of young traders were not around in 1968 during the Vietnam War. I was only 10 years old. I didn't know a lot about it. But as I said, my brother actually went down there. He was like 16 years old. And I remember my parents yelling at him about being down there. It was a violent period of time. They destroyed, the protesters destroyed a lot of stuff in Grant Park. They hit buildings. They started mass fires across Chicago. A lot of people got hurt. And I think the way things are set up right now, with the way the college campuses are, this is just a little bit of what we're going to start to see. And I really think that when we get into later into the summer, that we're going to see a lot of rioting. I don't want to say rioting, but I want to say a lot of protesting. The rioting, I don't know. I mean, I think that that'll happen, but I don't know exactly when it'll start. I know that during COVID, in the beginning of COVID, I made a lot of really big predictions. And I haven't come out and said much about it, but my prediction is that there's going to be a lot of problems into these conventions and into the election. And I think at that stage, the markets are just going to go crazy. Now, I don't know if Rich wants to talk.
I can hear you. Can you hear me now, Danny?
Oh, great. I can hear you.
It was my fault. This
Rich.
I got a new computer this week.
I know, that's what I told Marlon.
And I hooked up new speakers, different speakers, and I didn't change the setting to I literally just hooked them up like an hour before the show. I changed speakers. And that's why I was listening on my own.
All right, that's okay. That's cool. That's kind of what I was asking.
I'm going like, God, it couldn't have been that simple, and that's what it was. By the way, I'm really happy with my new computer. It is lightning fast, and I really needed it. But now I'm up and running. So I hope everybody heard what I was saying before. I think they did.
Yes, they did.
And I'll stick with what I'm saying. If we get a little bit of an up move here in the next couple of days, we are going to have a huge up move in the next couple of weeks.
I agree. I do. And I was saying, I don't know if you heard me talk about it. I was talking about the way the the S&P just hovered along like a back and fill pattern all day. It doesn't really ever break down.
Well, I was thrown for a loop, but at the end of the day, I said, I said I thought we could go down. I mentioned put spread that actually lost a couple bucks, but nothing. It makes me even more confident about what I'm seeing, is because we could have broke 15 or 20 points easily this afternoon, and it didn't do it. And
well, it was sloppy price action. I mean,
well, and 15 or 20 points right now compared to what I'm looking forward to, what could happen in the next couple of weeks, is nothing.
right.
And I don't, I don't think it was sloppy price action. We're gonna know. I think we're gonna probably know by Thursday, and we may even know as early as tomorrow if it reaches the levels that I'm looking for. And I kind of went over those with you earlier today and with the people in my room. And
Well, Rich, Rich, we were talking about some of the new products that you're bringing out, and I really think that, I was one of the people, and I know someone else in your room mentioned it about the crypto levels, and that's not going away. And I said in the opening print back a couple months ago that I think there should be room in everybody's portfolio for at least a little exposure to crypto. How do you feel about that?
The theory of crypto, I really, really like. And crypto is becoming more like money with all the attributes of money. It's more readily acceptable. It's more recognizable. People will use it to facilitate transactions. It's almost better than gold in certain respects because it's finite in quantity, and of course there's some of it is lost a little bit along the way quite often. But I absolutely agree that there's a place, everybody should have some, because I think longer term it's going to go up. I still don't have any, but a lot of people I know do, and at some point I will. And the other thing I'm going to do when I'm going to follow Ethereum and Bitcoin to begin with, but I'm also going to follow the ETFs that track them. So I'm working on the database right now. We're working on developing the sheets for them. I think I may have them up as early as Monday. But probably for sure sometime next week. My preliminary sheets which will give the support and resistance on standard deviation levels for the weeks, the daily standard deviation levels and the weekly standard deviation levels. And I'm planning on coming out with some more, data on them as over the next couple of weeks. But the sheets I'm hoping I'll have done by starting by like Monday, Tuesday, Wednesday, somewhere in there next week.
Right. So you can basically excuse me, geez. You can basically do any futures market, right?
Pretty much any futures market. And where I always start is I look at the uniqueness of every market. So every market's different. There's and I have a time fractal pricing theory that I use. There's the boss. She's going to have to sit for a while. I look at the times that the markets operate in, and base my work off of certain times. And each market, as I say, is different. And then I look at the implied volatilities of those markets to build the standard deviation levels that I look at. And so it's other than building the database and knowing that each market is a little bit unique and knowing what hours I look at that I consider are the hours to use. Like I use a different closing time than most people in the S&Ps in the stock indexes. I use a 4:15 settlement price, and it makes a huge difference over the long run about settlement price, where my standard deviation levels are, because it's quite often a lot different. The 4 o'clock close is different than the 4:15 close, and I'm going to use different times in the cryptocurrencies than what other people use. there are some idiosyncrasies about the cryptocurrencies that I'm going to have to like kind of go over. But once I build my database, which won't take long. I mean, because I'm so adept at building databases, then I just apply my programs to what I'm looking at, and getting the standard deviation levels is actually, that's the easiest part. It's moving on from there that's hard. And my levels have been in the stock indexes have been really good.
Yeah. Oh, they're excellent. Can you pull up a Bitcoin chart?
Yeah, I can actually. Let's see. Let me go here to these. I was looking at some stocks here. Let's go Bitcoin, BTC. Let's go BTC. And let me go to my daily. Actually, I think I may have this. No, it's I do. Let's go here to the daily and see what we have here. I was tracking it on one of my other pages, and the other thing is that I still have some data to like pull over from my other program. Let me see. I want to see. I might have this in a Fib stocks page. No, I guess this is probably it. I had a great Bitcoin chart, but I don't think I've gotten that data, those charts pulled over here yet. But anyway, looking at this right now, because I actually had I had a chart with all the levels up
Right
on it. This is Bitcoin right here. Looking at this, and here's let's look at the monthly, or a much longer chart here. Let's look at the monthly and then the quarterly. If we all recall, when Bitcoin first started trading at the CME, that it really started at the highs and then had a hard break, and then of course it went up, and they've been pretty volatile. And I think somebody said right in here was where the ETF started, just a few months ago. And we had a big move up from there. I'm looking for, I think Bitcoin is easily going to go over 100,000 at some point in time, probably in the not too distant future. The chart that I had, I actually had some levels, and I recall they were in the the 90s. Once we get above here, my next objective is the 90,000 area, and unfortunately I don't have that here yet, but I'm still working on bringing all my data to this new computer. And whenever you switch, it's a real process to even though I back stuff up all over the place, to bring it in and load it the right way. And I've had a few problems here getting this done with this new computer. But
so do you have any Bitcoin chart?
Well, this is a Bitcoin chart right here. This is the monthly Bitcoin chart.
I can't see it.
Oh, I thought oh, you know what? I got to share this again. Sorry. Let's see. Present, share screen. Sorry, share screen. And let's go here. Select entire screen right here. Share. There we go. I might, if I don't know if I can't find that now. Let's see if I can access that. I might be able to get this off this expansion drive. The other thing is I'm going to hook I will hook my old computer up pretty over the rest of this week sometime, and then I'll have it all networked together. I'll have like 3 computers networked together, but right now I don't. Let me see if I'm going to see if I have a Bitcoin chart in here. Let me go to this expansion.
Yeah, and by the way, everybody, we didn't plan on talking about Bitcoin. So
It's let's see, go here, expansion, and I gotta see. I have this whole thing saved in one place.
and how many studies do you have saved in that area?
Well, this is an 8 terabyte hard drive, and I think I have about 6 terabytes of data. And I have this is I got a lot of stuff saved on here, data, programs, charts, old files. But I just put a let's see, I just put a whole new backup on here with everything, and so I just have to find it. Oh, here it is right here, Acer. But I downloaded this too, and that would have been on the E drive. So Acer E, and go to users, Scala, documents. Oh, here we go. So now let me see. Let me see if I can find Bitcoin in here. Details. Scroll down here and see if I have this. Ooh, I got a little too aggressive there. View. No, let me go back up. I'm going to have a hard time finding this right now.
That's all right.
There's so much stuff in here, and getting off this hard drive. Let's see. Without downloading, I can go down here now. I can go here. Here we go. Oh, I don't have it separated by. Oh, there we go. 1 second. BTC. Let me see if I got this BTC numbers. Scroll down. Apple, Amazon. BTC. I'm in the B's now. Here, BTC, and this was 321. Let me see. I think I have some charts since then. 327. Let me see what this one is. And that is there. Come on. Search, rotate, and 327, and that's 4:43 p.m. So this is let's see, open. Why not that open? Oh, here it is. No, it is. Let me close that. Let's see.
Don't worry about it.
I want to open. Oh, here it is. Open here. Why won't that open there? Let's see. Go here. It won't open. I can't believe that. Open with. Oh, that's why it's. Let's see. Open with that.
Well, you have so many files, you can't remember where they're at.
No, I can remember, and this should be accessible right here. But I had some problems with I've been having some problems with what I was doing. And let's see, open with, share, so long. Rotate left, compress, zip, copy. There's another place I can get this actually, I think. Let me go here real quick. And go to sit, and I can go here.
Nico says amateur hour. Well, Nico.
It is. I have a lot of things that I'm trying to do right now, and it's definitely difficult. Let's see how my quantitative research. Let's see. There is BTC futures. Did I do this here? Let's see. I got to look for this attachment. I can't find this right now.
That's all right. That's all right. But anyways,
if we would have been, I'm not ready because I'm still setting up this computer, and it's not. I don't have my file set up the way I want.
That's all right, Rich. Don't worry about it. There's so much data there that's mind-boggling. Hey, but anyways, real quick, you talked to my friend Joel today, right?
I did talk to Joel, and Joel. One of the things I told to Joel, which I say to everybody, we were talking about it, standard deviations, implied volatilities, and what time frames that I use. I use a 365-day time frame with my standard deviation levels, and Joel was saying he used like a 250, the market trading days. And I think that's wrong, to use the days that the market trades to figure out implied volatility and do options pricing models, because we live 365 days a year. Events take place even on the weekends when the market's not closed. You have to spread options pricing and standard deviation models over 365 days, because, as I say, events take place outside of market hours. You can't price things to happen in 250 days, because although that might be the number of days that things trade, it's not the number of days that there are, and the number, or the time involved for events that will affect the marketplace. And, I traded options for a long time. And when you get to Friday, if premium was, pretty high, a lot of times they'd knock it down a little bit and take part of the weekend out of it, but they didn't take the whole weekend out of it, rarely ever. And, you'd come in Monday and obviously if they took too much out on Friday, the vol would be higher on Monday if something happened. So that's like something that everybody doesn't do. And as I say, he said he was pricing his models using
he's a commodity options vol trader, right?
Yes, he's a commodity options vol trader. Yeah, and trading volatility, you're obviously you want to be long volatility when the market goes up and short when it goes down. And he was saying some other things. I enjoyed talking to him. I didn't get to follow everything that he was saying, but I mean, there's a lot of different things that people look at when they're trading options and doing options pricing. And I actually have a couple of tools that I use that I look at like at the beginning of the week, I look at a 5-day standard deviation level, and I ratchet that down. And I also have a tool that I call strikes and play, where I look out I think about 18 to 21 days and then walk it towards the front. So I look at a one standard deviation on a 1, 2, 3, 4, 5 all the way out to 18 days. Let me see. I can bring up. Anyway, when you're trading options, you've got to look farther out and look at bigger standard deviation levels to know to kind of like band yourself within what's happening. And as you get closer to expiration, obviously just like things, prices eventually reach the cash price. Kind of like looking at something that's in backwardation or contango, and it moves either up or down to get to price at settlement. And looking at volatility is really no different. Let's see. Let me go here and just grab something real quick. I can go over here. This I know I have right here, because I can go right here to let's see, go here to handle stats and open up. Oh, let's hold on one second right here. Bookmarks, go here and go. Where's my alter ego? I've moved everything. Let's go here, Kajabi.
I don't know where Rich went, but you know what? Here's the thing. Sometimes there's technical difficulties, and we had those today. And the other part about it is I put Rich on the spot. He wasn't prepared to pull out a chart like that. But what we'll do is we're going to call it a night. And sorry we didn't meet expectations. Nico, to say anything about amateurs, I think that's like kind of silly, but that's your opinion. I understand you probably came here and you expected more. But again, it's sometimes there's problems and other times there isn't. So we're going to leave it like that, you guys. I appreciate everybody coming in. The gist of this is that Rich thinks the markets are going a lot higher. I don't disagree, especially as we go into the end of the week and go into the options expiration. As long as we're holding, the 50, 5190, 5185 level, and I think we will. I'm looking to buy the dip. So we're going to leave it like that. I want to thank everybody for coming in, and we'll see you next time. Take care, everybody.